So the chapter 8, part H, question number 8.
Which one of the following best describes the effect that profitable operations have on the balance sheet of a business?
Yes, so you can highlight the keyword profitable operations. So basically, how can you figure out whether this business is making money or not? Right? How can you figure out whether the business is making money or not? So the number one is owner's equity is increased. So can you think of? If the owner's equity is going up, it means the business is making money, right? Number two, assets are increased. Asset means you are buying home after home, car after car. So does it mean is it profitable?
No.
You may be using line of credit to buy. You may be taking the money from the in-laws, right? Right? Number third, cash is increased. So basically, sometimes you take the money out from line of credit or credit card, buy the home, right? It doesn't mean so you are making money. Number four is liabilities are decreased. If the liabilities are going down, so you may have borrowed the money from one part to the other to pay the other one. So the ultimate is if your equity goes up, equity is going to go up when your net income, when you earn the net income, right? Right? Is going to grow the equity. So it's number one. And which one was the next one? Next question. We did that. Balend, we did that. So next is 13, I think.
13 is also 23.
14, 15, okay.
23.
Yeah, so next question is 23. So we go to 23rd. And the 23rd is, yeah, it's a very important question. So it's depreciation expense is. So highlight the word depreciation. If you don't know, it depreciates your 1 mark in the exam. And sometimes you have to come back again to the class. Right? So depreciation expense is an accounting concept. So highlight the second one. It's an accounting concept which attempts to allocate. So which tries to allocate mean divide or distribute, right? The cost of an asset over its useful life. So bottom line is if you buy a car today, so how long the car is going to last, right? So basically, so that's the accounting concept. Okay? And so just remember the word accounting concept which tries to allocate or divides the assets, right? And how long the assets is going to last. And if you go to the question number 32, it's the same story. So we don't have to do it. So the question number 32, depreciation expense is. So what is that? Is number? Which is that? It's none of the above. Why? Because it is an accounting concept. You don't find it here.
No.
You understand, right? Do you understand? Some of you will say too, a deductible expense, and you're going to depreciate your 1 mark. Okay? And then we go to the next one is from there is a 36. So, depreciation expense is, what is that? An accounting concept which attempts to allocate the cost of an asset over the life of the assets, right? So now you know what depreciation expense is. Okay? So now we go back to the question number 26, 53. Oh yeah. Sorry. So you can also go. No, that will do later. Yeah. Yeah. So we go to the question number now 26. So go to 26. Very important question, this one too. So 26 is Which one of the following is false? So highlight false with respect to proprietorship. So highlight the word proprietorship of the business. Property means ownership, right? And number one, a proprietorship is terminated upon the death of the owner. If you are a single owner, you die, what happens? Business dies. If you are a pizza king guy, you burn your own dad in the oven, what's going to happen? Your business is done, right?
That was a long time ago.
Yeah, I was new to this country that time. Yeah. And the two, a proprietor must pay tax on his business income at personal tax rates. Is that right? True, right? So highlight personal tax rate. It means single owner pay tax. Third, proprietor is liable for all debt of his business to the extent. So highlight to the extent. It means to the limit of his capital investment in the business only. That's false. If you invest $50,000, you may lose $100,000 if somebody sue you. You still have to pay for a lease if nobody comes to that pizza place again, right? Because the recipe was not good. No, seriously, right? So number third is a false. Number four, there is no legal separation of the asset of business and the other asset of its owner. That's true. If you are a simple owner or a partner, right? So there is no separation. So that's it for this part.